I'll be joined by Dominic Dowd, the Director of North America at Shoreline Consulting, and Zion Hilelly, Managing Director, Head of Solutions Operations and Transformation at IHS Markit. Welcome to you both.
Hi.
Hi there.
Hi, Lawrence. Thank you.
Thanks. So we're halfway through the morning of the 24th Annual Investment Operations Conference, and we're really keen to learn more about the role of data management for the next 12 months for our organizations. The first thing to maybe think about are the different stakeholders that need this data and what they need it for. Dominic, if we start with you, how do you try to think about that segmentation and their needs?
Sure. Yep. Thanks, Lawrence, and hi, Zion. So, look, my experience is there are 7 data consumer personas at any large asset owner or asset manager. So, in the financial markets, this breadth of data persona types results in a wide breadth of data dimensions to consider. So, you need to be thinking about things like data types, asset types, geographies, sectors, data breadth and depth, temporal matters such as velocity, frequency, and history, traditional versus new data. So when you think about all those different domains, one of the core areas of data focus is really what I describe and many practitioners describe as core investment data, which includes the holdings of a fund, the transactions, the cash flows, benchmarks, and market available and reference pricing. That data set, that core investment data set, is consumed by virtually all of these major personas. I'll just do a quick walkthrough of the different, that 7 group, and I'll touch down just very lightly. So the first one being operational groups, performance and attribution, investment risk, reporting and analytics, groups like that. Their main focus is really that investment data, those buckets that I described earlier. There might be small nuances about speed and delivery and so forth, but that's their core need. Then if you take a big picture look up at the fund-wide allocation of assets, so total portfolio groups, they're looking at core investment data, plus they need other things like global fundamentals, macroeconomic data, FX, and they're covering all sectors and geography with daily data and history to support that. The next group in that is trade execution, so say the third of those 7, and they're mainly, given their focus on trade execution, they do require core data, but they require it at maybe a little bit higher velocity, and they do require transaction history to optimize their trading and assess their performance. The next 3, and I won't kind of go through all the details of the next 3, but the next 3 groups are in the investment departments. So you'd have traditional fundamental as a persona, quantitative fundamental, and then systematic and factor. Each of those group types, and they often span many different groups at funds, require core investment data, and then there'll be nuanced differences in their needs. You know, for example, in fundamental traditional, they will be looking, that could include things like manager performance of third-party managers, new alternative data sets to help inform new investment theses, and they're sector specific, those fundamental traditional. The fundamental quantitative, I would say, are investment data is core again, but they're looking at a broader selection of sectors and geographies. And so theirs is a little bit wider. And then the last group in that investment department is systematic and factor. And they're even a much larger group. You know, they may have they do consume investment data. They consume a variety of other data sets, and they'll typically have large securities of interest lists, easily 10,000 names that they could be following. And then finally, just one last one, a little bit interesting, maybe a little bit different, is the executive user. And the executive user, you know, we all know that they're thinking about things like broad fund holdings, performance of the fund, and exposures. But my experience is they like real-time question answering machines which are driven by data. And it might be as a crisis emerges in a particular country, they want to know what their exposure is to that particular currency. So those are the 7 that I would describe at a large asset manager.
It's a really good model, Dominic, for thinking about the different users. Coming to you, Zion, one of the things we heard just earlier from Lunada, Peter, and Sally is that across an organization, there's always concern that some of that information could become siloed and not heterogeneously cascaded and understood. How do you think about ways to sort of mitigate that risk?
Well, hi everyone, and thanks for having me. Well, in a nutshell, the risk of information being siloed is super high. If we think about it, investment management is, for all practical purposes, an information processing business. So if you have inconsistency in data, essentially your assembly line is broken. So it is like, say, a car factory where the engine doesn't fit the body of the vehicle or wheels are misaligned. It is the same if your front office records don't match your accounting records. So I'll provide three examples of potential risk of siloed data for investment managers. First, when you have a portfolio manager trading off a different data set, we cannot expect the folks that measure performance or maintain the books to come up with relevant results. Because the risk a manager takes and the money they make have to be correlated and therefore must have common underlying data to be meaningful. It's just fundamental. The second example of risk, if the data is not aligned, is in liquidity and trading. They also have to follow the same principles. For what good is the cash reconciliation if we reconcile a different cash balance than the one used by the portfolio managers to invest? If that is the case, in your organization, anybody on the call, you shouldn't be surprised if you have overdrafts or uninvested cash balances. And then the last example I'll mention is compliance. So too often we see compliance rules applied to different data set or the wrong one, and exceptions being identified. So for compliance and regulatory function to help identify and prevent violations, it needs to use the right set of records at the right time during the investment lifecycle. So to your questions, the risk of inconsistent data as an asset manager is very serious. And as such, the front to back trend we are all hearing about, where all the personas Dominic just spoke about, like portfolio management, risk analytics, operations, accounting, and even custody, all being integrated with consistent data across the investment lifecycle is real. It's a real trend. So it is becoming a must-have, and it's a giant focus for the industry, including at my own firm, IHS Markit.
I think perfectly brings us to an audience question, so our delegates can offer their views. We get a great read of the Australian market right now. Do you, as delegates, trust the data that critical decisions are based upon? And there's a range of options in terms of how strongly you agree or disagree. So whilst we let the delegates have some time to grab their device or to click through with their option, let's look at the data governance, which is a key piece of the puzzle, particularly given that we need to create a culture around the capture and the protection of the data. Dominic, how do you think about stewards and users within different organizations and data governance?
Thanks, Lauren. I think about them as data stewards and owners as really important. They're critical. They're critical roles in any organization's data governance approach, and candidly, in any organization's core and overall business. So, a good way to think about a data steward and owner is as a data producer for many organizations. Although I would say I do have some experience in that within organizations, but people don't always want to be data stewards and data owners because can be a thankless job. Even though it's very important, it can be thankless and it comes with expectations and obligations. So, but I really think it's important. I think people generally now acknowledge that, and I would maybe highlight three things about how if we were to ensure appropriate capture, analysis, and protection of data, stewards and producers should be involved in three ways. First, helping to define the overall governance strategy and the framework, policies and controls and so forth. The stewards and the owners should really be integral members of any good governance committee, both at the executive level and then right through to the operational committees that are just managing the day-to-day practical matters. The second is the owner should be helping to define what's possible in the context of the data that they're true experts in. They should be helping to define what's possible for consumers and what the reporting metrics should be to meet a consumer need. And the third point here, maybe just finally that I would say on this one is that data owners should be thinking about producing the best quality product. And that means rapidly and continuously refining, updating, and enhancing their product as a best practice. And if you think about, an important kind of thing I like to think about, you hear people talk about, is fix at the source so that all can benefit. Let the producer manage the day-to-day, fix it, and it'll flow through the data ecosystem so that if you fix it at the source, the entire organization can benefit. So that's my thinking.
Zion, anything that you add to augment and to confer on our audience?
Yeah, no, I agree with Dominic. Maybe I'll add a couple things to it. But I agree the governance of data should start with defining requirements and standards and then follow the investment process. So yes, organizations do need some mechanism to govern data on the enterprise level, but the governance model needs to be applied practically or organically. So I personally strongly believe it should not be an administrative corporate function that is done top down. Rather, in order to work effectively, it should be more natural and bottom up. And maybe I can explain a bit. So just as Dominic touched upon, there are several standards that are kind of common. And quickly, the first is what we heard a minute ago. Data should be captured and cataloged at the source. Second, each data component should be traced to the accountable parties and linked to the actual data consumers. Thirdly, it needs to be available to all consumers and following a proper data provisioning process. And lastly, perhaps the most important one, is ensuring the data set goes through a robust quality control in order to establish trust. Trust in the data is key. But one thing I'll add, these standards, while they seem obvious and simple, they're very hard to follow unless applied in practical ways. So too often we see a disconnect between the governance function and the ability of data owners to actually adhere to their standards. So I just advise organizations should make sure that data owners are equipped and empowered with tools and business processes to follow the guiding principles set for data. We all know this is it's not one size fits all. Each data set has its own nuance. So the devil is in the details, and the data world is not getting easier for all of us. So with area like ESGs and the move to real-time access, it's just something for everyone to think about. I'll give an example where, ideally client and account data should be captured upon sales. That's an easy one. But and then instead of each function post-sales, recollecting the same set of data, storing it into own systems, the CRM system should be the single source of truth for all consumers downstream, not just the sales folks. But again, we know that it's very difficult to open up the CRM to everyone, create interfaces, the controls to leverage this client data. So unless the organization is ready to have sometimes tough conversations internally and sometimes with their providers, this is not going to be feasible. So commitments from the top, resources to develop the right solutions must be there too. So for folks in the room that are EDM governance team, it's really about stepping in, act with conviction, get the buy-in from all stakeholders to embrace and adopt the standards. Then, once that is there, then the environment is ready to work with the teams closely, function by function, to enforce the standards. So again, I'll summarize. It's more organic, bottom up, not just mandate from the top. I think that's in conclusion.
Perfect. So thank you so much, Zion. We can give you the answer to the first poll question, which I think is really interesting. So do you trust the information that critical decisions are made upon? Now, we had 5 options. Strongly agree, which presumably is full trust, was only 9%. Now, in terms of agreeing, that ledger was the stronger half, with 46%, the most popular answer being that they do agree, but not strongly. And then there's sort of the tepid response of somewhat, not sure, through to strongly disagree, came through with 39, 4, and 1%. So, 44% of our audience, and we've had 74 votes so far, feel that they're not fully, they don't have total trust, which makes a lot of sense. As you touched on, Zion, there are so many different ways that data can be either overlooked or incorrectly captured or perhaps misconstrued or conflated with something else. We've got some audience questions which I'll throw in to reward our audience for their active engagement. I've got David Gwilliam. I hope I've said that right. You might be David G as a middle initial and William, but David Gwilliam at IFM Investors. Given the reluctance mentioned, what methods can be used to encourage the voluntary ownership, stewardship of data? So how do organizations try to create that ownership culture where, as you said, Dominic, it's a pretty thankless task. You only get cited and talked about if something's gone wrong. What have you seen as some of the techniques that can be used? Alas, you're on mute so far, Dominic. Sorry.
My apologies. Yeah, I think you hit on part of that there, Lawrence, with culture. And, so I think establishing a good culture part of establishing a good culture is ensuring that various roles are highly regarded, right? So I think that data culture is a good way to help ensure. And by data culture, I mean an organization starting with understanding the value of data, number one. That's widely talked about now, but it hasn't always been the case. That's a relative. Data has, in my opinion, come into the forefront of many organizations over the last 5 or 10 years. Recognizing the value, giving it executive profile with senior leaders in an organization is important. Allocating budget to programs and to fund both programs, and not just big programs, but day-to-day operational things as well. Giving the right tools for governance. So whether that's cataloging, I believe a transformational change in governance and in data culture is actual search. So natural language search has enabled people across the organization to find things that maybe was in without that technology was the domain of more technical people. So those, I think, are some of the things. Investing in data, understanding the value, and those are all things I think we would generally think of as being core to a good data culture.
Zion, a question for you. This comes from Michael. Couldn't tell you who Michael's with, but we can probably cross-reference later in terms of our delegate list. Can data stewards and data owners be the same person for a certain set of data? What are the risks with this approach?
I think they can. I mean, just like with any business process, you want to have the right checks and balances. You want to have the right segregation of duties. The people that in the weeds all day, servicing customer, collecting the data. You may need somebody to be ring fenced to just focus on, is it done right? Is it connected upstream, downstream properly? I think like Dominic says, it's all about the culture. And I think it has to start with awareness and education. It has to be, so if I'm responsible for a function, either in the front office or the back, if I don't have an appreciation to how my data is sourced and impacts upstream and downstream, I cannot do my job well. And then I end up with having a lot of people around me reconciling all day. So I think that segregation is key to some degree to really facilitate for that. Because once you become aware and you have somebody who could really think about the overall implication of your data set and the users, then you can start connecting dots and aim to really share the data in a consistent way throughout. So it's
splendid. Let's bring in the audience for another poll question. The first one was very popular. How effective within your organization is your data lineage, audit, and transparency? And we've got a range of options, very effective, cascading down into challenging. Whilst the audience thinks about that, there was something you mentioned earlier, Zion, that I think is so interesting. You talked about ESG data. Now, data is not only growing in volume, but there are nascent forms of alternative data sets that are quite complicated, not least of all if there aren't agreed taxonomy and metrics. And presumably, we've heard of large organizations where there are different ways to take into account ESG factors. It might not be the same in each portfolio. How do you think about some of the inefficiencies here, and likewise the risk of decentralization and there being conflation of terms and different sorts of data?
So maybe I'll do what Pete did before in the earlier session, because I think it's important to maybe just take a step back and think about the evolution of the investment management industry before we go into today's. So I'm going to date myself a bit, going back to my former life at BlackRock and the evolution of Aladdin. But just think about in the 80s and 90s, it was all about basic stuff like knowing what I own in fixed income and equities, where the asset classes were all managed separately, separate systems. Then we migrated to, once this basic data were addressed or partially addressed, for each of these asset classes separately to bring them together onto multi-asset platforms. Then most recently, we became more into ETFs, and that was about integrating active and passive asset management portfolios on a single platform. Today, we hear more about alternatives, and obviously with just like we heard earlier, with the increased allocation to alternatives and private investment, just given the low yield environment, the conversation now is evolving to alternatives and more complex asset data set. So the consolidation of risk now between private and public is becoming key. So it's very tied to the complexity of the data set coming in. It's how the industry has processed throughout the years, and now it's the new side data set that is more complex. So honestly, private markets, it feels like the 80s. I'm back to those days where it's still paper-based information. There are no CUSIPs or ISINs, no standards, no mechanism to exchange data in the ecosystem. So it is really back to basics. And it feels like we need to focus now on single security master, back to what is it that I own, common identifier. We heard a lot about digitization of PDFs, which is becoming key. So the connectivity and efficiencies we are seeing in the public fixed income and equities, while it's not perfect, they're still nowhere near where they need to be in private markets. And so I agree. There's a lot to do in that space.
Much to do. Dominic, one of the topics we heard earlier was the impact of the pandemic on all of our working lives. Presumably that poses some opportunity, but potential risk around physical storage of data and increasing confidence of using the cloud and other options. How do you see this mapping out in the next few years?
Sorry, you mean like the evolution of the cloud and facilitating? Yeah, I mean, a couple of things on this one, Lawrence. My experience actually, even prior to COVID and the lockdowns, is that for institutional and corporate users of data, this has been largely a remote. This has largely been remotely accessible, irrespective of the physical location it's stored in. In fact, in the vast majority of cases, data is being accessed remotely by technical, operational, and business users. Physical access to data centers, which you associate as being a potential impediment under COVID, physical access to data centers is primarily in the infrastructure build stage and less so in operational stages. So while the cloud helps, I do believe the cloud helps facilitate access to data. Most data users have been accessing, internal users, operators, and technologists have been accessing data remotely for quite some time. And even if there are outages, so it isn't just day-to-day operational, even if there's outages or failures, a lot of that repair work that's done is done remotely as well by engineers. We've probably all been in those scenarios where we've seen in the delivery of data sets. So I do think that where the bigger impact is likely to be is in retail user access to data. So if you are an institution that has retail clients, and not all of the folks I think in the conference have that, but some will have some retail clients that they can access information on a more seamless basis, and it'll just make that easier and just more fluid overall. But I do believe the core day-to-day operational things, COVID has not really had that access has been pretty manageable remotely by all the different core folks within an organization.
Well, we're down now to our last minute. So, Sion, I'll give you the poll answer, and then hopefully we can have a succinct answer to the final question. 43% felt that the answer to how they feel about their data lineage was challenged. If we combine that with some lack of trust about the information that they're making decisions on, if you augment all of this, Zion, thinking about cloud, about the alternative data sets, and the challenges of decentralization and a lack of trust, where can our Australian audience and community get some best practice? Are there situations that they can look to overseas potentially where we can pick up some tips?
So you covered a lot, but maybe I could mention 3 best practice ideas. Obviously, there's a ton to be discussed here. But first and foremost, I think let's all agree that there's a premium to data that is actually traded on every day. So, for example, when capturing certain data like security master or prices, that should be done in the front office and feed downstream, not the other way around. Just because the markets is the best validator for the accuracy of the data. So I think that's a good practice for all of us, regardless where we are, public, private, and the like. I think second thing is, which I think we touched upon before, we should all embrace the fact that the more eyes on the data, the higher the quality and the higher the value. And I'm saying it because, believe it or not, this is still not a shared belief, and some continue to keep the data within their respective areas for just the wrong reasons. I think maybe lastly, I'll say, in terms of best practice, in many organizations, the way to improve data issues and get to a better spot is breaking silos. It's about being maniacal about connectivity. And we all know this is easier said than done and requires some really strong leadership to pull off, but it is a big one in the data space to benefit from really all the new technologies, big data, and the like, what's coming. So I think I'm sure Dominic can volunteer some more.
Well, listen, Zion and Dominic, we're straight out of time. So when you do volunteer more, Dominic, hopefully it will be on site in Australia in 2022. It's been a real pleasure to talk to you and learn from you both. Thank you so much for joining this conference.
Thanks, Lawrence and Zion. Have a good conference. Take care.
Bye-bye.
Bye-bye.